Tuesday, January 15th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about the nature of money, how it evolved, and how we need to understand money in order to understand the system that we're in, the corrupt fiat money system, debt-based system that is enslaving the world. I know I go on about it a lot, but it needs to be exposed and we need to keep at it. And of course, I always get new viewers, and I will use some of the information or material from this book, What Has Government Done to Our Money, and the Case for 100% Gold Dollar by Murray Rothbard. I use some of the material from this book, and I highly recommend this book. It's not just for economists, it's for everyone. Easy to read, it's not a long book. You can find a free PDF online of this book, or you could buy it at the Mises.org website. Mises.org is a very good website for the Austrian School of Economics. They're one of the major proponents, the Mises Institute in Auburn, Alabama. Before that, of course, I will look into what the markets are doing this morning in London. The markets have been going nowhere really the last week or so. There isn't that much direction. The stock market is like up and down. We have gone up, of course, since Christmas Eve, but lately it's just consolidating. Precious metals is doing the same. It is frustrating, but that's how markets are. And of course, the markets are manipulated, especially interest rates or bond markets. I mean, I looked at the interest rate in the UK. The 10-year yield is at 1.3%. With all the debt we have, it's crazy that and the rising, the inflation we have in the UK, which is more like 4 or 5% at least. They're really sucking the blood out of savers and the whole economy just to keep their this fraudulent system going. So it's just before 8 a.m. London. So let's see what the markets are doing this morning. Gold, of course, yesterday did what I was talking about. We were strong overnight and going into the US hours, and then it came off. Today, it's not that strong overnight. We're at 12.90, down about $1.50. The range has been, we're pretty near the lows here, 12.90. It's been the low, and the high has been 12.93.50. Silver 1561 is down 2.5 cents. Range has been 1561 to 1570. So we're just near the lows here as I start this video. The Dow, well, stock markets yesterday were fairly weak. The Dow finished down 86. A third of a percent lower. S&P finished over 0.5% lower, and the Nasdaq Composite finished down 65 or almost 1%. This morning we've gone back up. The Dow is up 0.5%, 127 points at 24,025. S&P 500 is 25.93, up 13 or 0.5% as well. And the NASDAQ 100 future is up 0.6 at 65.80. Currencies, yeah, they're quite steady. The pound has been fairly firm lately. I think the reasoning here is that Brexit will be delayed, or there might not be a Brexit, or it's so confusing. Today is a very important vote. We could see the present government, fall, and we could even see general elections. It's all up in the air. So the pound is at 128.80, up about 0.1%. We did get above 129 yesterday, but today it's underneath that level. Euros fairly steady, unchanged, 14.70. Dollars up 0.5% against the yen, actually. So it's that's a bit of a change here. A dollar has been weak against the yen. We're at 108.65. Dollar is unchanged against the yuan, 6.75. Oil up 1%, 51.34. WTI. So it's all quite directionless, I would say, the markets at the moment. Yeah, I don't want to call like a collapse, imploding system. I know there's the government shutdown, but we need to keep looking at the numbers, and because the numbers don't lie. And right now things are fairly stable. Underneath the surface, though, things are not great, and that's been shown by the how the yield on the U.S. 10-year has dropped quite a bit in the last month or 6 weeks. That is not a good sign for the economy. And the fact that people have pared back their expectations of rate hikes by the Fed from, Goldman Sachs was looking for 4 rate hikes this year. Now people are talking maybe about 1, and maybe even the Fed turning around and start cutting rates. So that's how things are this morning. So let's go on to what government has done to our money. And I highly recommend this book. I've done this, I've talked about this book many times before. Who is Murray Rothbard? Well, Murray Rothbard, he was born in 1926. He died in 1995. Wikipedia says he was a heterodox economist of the Austrian school, historian and a political theory, whose writings and personal influence played a seminal role in the development of modern right libertarianism. Rothbard was the founder and leading theoretician of anarcho-capitalism, a staunch advocate of historical revisionism. He called fractional reserve banking a form of fraud and opposed central banking. So this is the guy that is formed a lot of my opinions about money and the system. It's interesting as well because he went to Columbia. It says here he attended Columbia University, where he received a Bachelor of Arts degree in mathematics in 1945. And 11 years later, his PhD in economics in 1956. The delay in receiving his PhD was due in part to conflict with his advisor, Joseph Dorfman, and in part to Arthur Burns, who became Fed chairman, right? Rejecting his doctoral dissertation. Burns was a longtime friend of the Rothbard family and their neighbor at their Manhattan apartment building. It was only after Burns went on leave from Columbia faculty to head President Eisenhower's Council of Economic Advisors that Rothbard's thesis was accepted and he received his doctorate. Rothbard later stated that all of his fellow students there were extreme leftists and that he was one of only 2 Republicans in the Columbia campus at the time. Arthur Burns, who rejected his doctoral dissertation, eventually became chairman of the Federal Reserve. He was chairman of the Federal Reserve, let's see here, from 1970 to 1978 during the period of stagflation. Let's have a look at the back of the book, what it says, from the introduction by Murray and Rothbard. And I'll read here. It says, let us first ask ourselves the question, can money be organized under the freedom principle? Can we have a free market in money as well as in other goods and services? What would be the shape of such a market? And what are the effects of various governmental controls? If we favor the free market in other directions, if we wish to eliminate government invasion of person and property, we have no more important task than to explore the ways and means of a free market in money. So just asking the question is an interesting point, because nowadays most mainstream economists, they don't question the system we have. They don't they accept as a given that governments have to, with the private banks nowadays, that's how it works, control and issue the money. Well, I would say government doesn't really control it anymore. It's the private banks. It's been hijacked. Why can't the market decide what money is? Money is just, if you understand what it is the most marketable commodity, and that's how that's how this book starts. First, we need to understand what money is. So with that, I'll go into the beginning of the book, and we have to look at money and how it began. This is like a regression analysis. We go back and see how something started to understand it, right? So, money in a free society, the value of exchange. And I'll read here from the book. How did money begin? Clearly, Robinson Crusoe had no need for money. He could not have eaten gold coins. And a lot of people always have that comment. Not a lot, but a few viewers comment, oh, I can't eat gold coins. I can't eat silver. So listen to this. Neither could Robinson Crusoe, and Friday, perhaps exchanging fish for lumber, need to bother about money. But when society expands beyond a few families, the stage is already set for the emergence of money. To explain the role of money, we must go even further back and ask, why do men exchange at all? Exchange is the prime basis of our economic life. Without exchanges, there would be no real economy and practically no society. Clearly, a voluntary exchange occurs because both parties expect to benefit. An exchange is an agreement between A and B to transfer the goods or services of one man or woman for the goods and services of the other. Obviously, both benefit because each values what he or she receives in exchange more than what he gives up. When Crusoe says exchange some fish for lumber, he values the lumber. He buys more than the fish he sells, while Friday, on the contrary, values the fish more than the lumber. From Aristotle to Marx, men have mistakenly believed that an exchange records some sort of equality of value, that if one barrel of fish is exchanged for 10 logs, there is some sort of underlying equality between them. Actually, the exchange was made only because each party valued the two products in different order. And he goes on to say, why would exchange be so universal among mankind? Fundamentally because of the great variety in nature, the variety in men, and the diversity of location of natural resources. Every man has a different set of skills and aptitudes, and every plot of ground has its own unique features, its own distinctive resources. From this external natural fact of variety comes exchanges. Wheat in Kansas for iron in Minnesota, one man's medical services for another's playing of the violin. Specialization permits each man to develop his best skill and allows each region to develop its own particular resources. And then he goes on to talk about barter. Yet, a direct exchange of useful goods and services would barely suffice to keep an economy going above the primitive level. Such direct exchange or barter is hardly better than self-sufficiency. Why is this? For one thing, it is clear that very little production could be carried on. If Jones hires some laborers to build a house, with what will he pay them? With parts of the house or with building materials they could not use? The two basic problems are indivisibility and lack of coincidence of wants. And then he goes on to talk about indirect exchange. But men discovered that in this process of trial and error, the route that permits a greatly expanding economy, indirect exchange. Under indirect exchange, you sell your product not for a good which you need directly, but for another good which you then in turn sell for the good you want. At first glance, this seems like a clumsy roundabout operation, but is actually the marvelous instrument that permits civilization to develop. So yeah, and that's how money develops. And I will stop here right now, or else this video will go on forever, and I'll come back to the book later on. But yeah, what the Austrian school and Rothbard talk about what money is several things, but most importantly is it's a commodity that's the most marketable commodity. Is the commodity that everyone wants more and more of. There's no laws of diminishing returns, and that's what money is. And it has proven to be gold and silver. Gold is the only commodity that people do not consume and would not, with water, for example, you drink enough water, you don't want any water anymore. Gold and silver is different. It's just the way it is. And it's allowed people to indirectly exchange products and wants. Of course, there could be other things that are very marketable. And there have been in the past, like cigarette, conchas. And what has government done to the money? Well, they've hijacked it, and they've used the legislature, the legal system, to make their fiat paper legal tender, and the only thing accepted in the payment of tax. So before we understand anything, in my opinion, of this system and how fraudulent it is, we need to go back and look at why there is money and why it's so important in the modern society where everyone's specialized. And that's why it's so important that we have sound money or free market money, because the free market, people always try to maximize their how can I say, interests. And they're not going to go, in a free market, they're not going to accept a piece of paper that is worthless. They're going to want something that's very marketable, something that is divisible, something that maintains its stores value over time, something that's easily accounted, you can account for, and something that is accepted the world over, and that's gold and silver. So if you enjoyed this video, make sure you give me a thumbs up, share it far and wide, subscribe to the channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day, and I'll talk to you later. Take care. Bye.